There we are. Welcome, Ro. How you doing, sir?
I'm doing good. Thanks for having me.
Yeah, no problem, no problem. Yeah, for those that don't know, I kind of just want to introduce you. Do you want to go through like a little intro? Like, what was your kind of your journey into crypto? We're gonna get into some spicy takes. You've got some. For those that don't know, Ro's got some like really great takes. He's a deep researcher, and yeah, I enjoy following your ex. So yeah, let's give the viewers a little bit of intro. Like, what was
Uh,
your journey into crypto?
Thanks, Byron, for inviting me first. Today I'm a researcher at Coin Bureau. Coin Bureau is one of the largest YouTube channels trying to educate the masses on crypto and blockchain technology and all of the craziness that you and I are used to on X, but the majority of people have no clue what's happening right outside the rabbit hole. So that's part me. I'm an educator at heart. And the other thing that I really love to do is to make money. So my whole game is to try and help people uh, do it in a way that you know it just doesn't sound um, most of CT, it's all about pump and dumps. It's about kind of
Yeah.
following the next KOL, and they don't really build a thesis. So what I want to do is I want to help them evolve into a thesis, understand what they're doing and why they're doing it, and that's been my entire game. I got into crypto in 2020, 21. It was right around the NFT boom, and what pulled me into the industry was, of course, right, the bull market, because
Mhm.
that's what brings everybody in. And
Exactly.
when I got in and I got settled and I lost a lot of money, and that's when I had to make that decision, like, okay, what do I stick around for? And so I realized, the more I read, that the industry is more than just tokens. And that got me really hooked. The idea of cypherpunks, the idea that you can have private money, the idea that you can create better financial systems, and especially me coming from India, where I've seen the challenges that 800 million or so people in my country face every single day when it comes to financial inclusion, it
Yeah.
became a topic of deep interest for me. And that's when my journey started.
Right on. No, great story. Yeah. I mean, similar roots on my side, like what all happened in Canada, we discussed. So for those that don't
Mm,
know, Rose got his own podcast and YouTube, so definitely go check it out. And we did a little bit of a podcast. I think that's coming out here pretty soon. So yeah,
yes.
we've got some good takes on that. But yeah, no, like I completely get it. Like I grew up in Canada. Kind of globetrotted around the world a little bit, settled in Argentina now. But so I've seen kind of a lot of financial woes also, like what happened in Canada with like people's bank accounts getting frozen, and then what's happened down here in Argentina with just like decades of hyperinflation. And then yeah, I know that you guys are going through like similar growth problems in India, and yeah, I mean that's also kind of what attracted to me to crypto. But I kind of want to get into like, so we're at like all-time sentiment lows right now. I don't think
Mm,
that I've ever seen in my time. I came into the space in 2016, late 2016, and in 2017, like it was just like a wild time. Like it like people would do like website updates, and the coin would just like pump like 5x or something like that, and or like and people were just like desperately wanted like anyone of influence to like just mention crypto or mention Bitcoin. Like I remember
yeah.
CNBC in 2017 put up a Bitcoin ticker, and
Mm,
it just drove crypto Twitter wild. And like I remember, like the prices were not good. Like at least late 2016, it wasn't until like later 2017 that everything super boomed. But like at least the sentiment was like amazing. I remember like people were just like super optimistic about the space, and just had this like really like strong like vision about like where the space was going. And now it's completely the opposite. Now we're seeing like some of the best fundamentals. Like I don't know what your take, we'll get into that, but like some of the
mm.
best fundamentals I've ever seen in crypto. But like the sentiment is just at all-time lows. So like do you think, like what do you think is driving this like super horrible sentiment? Like are people like disappointed by the ethos of crypto, or there's just too many mercenaries in the space? What do you think's going on?
Oh, well, it's a lot of different angles if you think about it. Like one angle is, of course, retail burned their hands one too many times,
Mm.
right? So imagine you're a retailer, you find out about the next coin on a YouTube channel or a Discord or a Telegram, and yeah, let's face it, most of them don't study, don't take the time out to research. So it's kind of both ways, but it doesn't happen as much on the equity side, right? You don't see tomorrow you will buy a stock, even if it's a, let's say, a pink slip, and 2 days later it's gone, right? That
Yeah.
kind of only happens in crypto, and what that has done over a period of time is erode trust big time. And this has not just been like meme coins, even established projects in the way that they structure their tokenomics. It's unfortunate, but it's max extraction. And I've seen really good large projects, and I don't want to take names, but I've seen really good projects structure their low float, high FTV launches, which typically pumps as soon as the token launches, and that gives an opportunity for insiders to dump on retail. Now you can do it once, you can do it times, but the moment it becomes a playbook, right? People are not stupid; they see that, right? Because at the
Hmm.
end of the day, it's their wallet, and they're voting with their wallet, and the fact that they're not here is the strongest vote as to how they want to spend their money and where they think the returns are. Today, also another reason is AI. Because of the AI trade, all of the attention, energy, and capital has gone away from crypto. So that's
Hmm.
two, right? And three, now imagine if you would have bought Ethereum in 2021, right? You would have bought it at the exact same level where it is today. So five
Yeah.
years and no return. And when somebody looks at that and they're like, how patient do I need to be if this is such a great technology? What something is definitely missing, which is why people not which is why you don't see the returns. And if you don't see the returns, again, that becomes a dampener in your capacity to come back again and again. Like there's only so much you can justify to yourself, right? And this is all I'm saying from an investor's perspective. Fundamentally, you bang on, right? We're seeing stable coins at an all-time high, both in terms of market cap and in terms of transaction velocity, throughput, and um, we're seeing rules and regulations come around the world, not just the US, Singapore, European Union passed MiCA, right? Every country around the world are trying to build their own regulatory regime around crypto. So that's also positive. And we're
Hmm.
also seeing a lot of projects gaining mainstream attention as well. Like Hyperliquid is the most recent one, which kind of was able to go beyond the CT zeitgeist, and now suddenly Main Street is talking about it. So
Yeah.
it's happening, right? But the reason why retail really is absent, and why the uh, you know why folks feel so low today about crypto is because they burn their hands and they haven't seen the returns. And if you don't see any of that, why would you want to come back? And when you see on the other side, you see a really hot AI market, right? Despite the crash, look at the spike when semis. I mean, it crushed Leopold, but then it. So they see that, they see adoption of AI, but they really don't see the adoption of crypto in the same way that they see that. And that to me are a couple of reasons why crypto isn't hot right now.
Yeah. No, that's fair enough. So I kind of have this thesis that now like everything's starting to trade like crypto used to trade, like except for crypto. Like like AI and the whole like tech sector is basically like
Yeah.
just super bubbly and super crashy. It's like
Mm.
super volatile. And I have this theory that like volatility is the new like standard regime. I think it's going to stay that way with this like whole like AI like paradigm that we're going into, I guess, because I think that everything is just so fast moving now. So people have like AI bots like scraping sentiment on X and all these different social platforms, and as soon as news comes out, the bots are just like rapidly trading this stuff. And I think that this is only going to amplify it with AI. And I believe that, like, at least my theory is that, like, yeah, everything is just going to be super like bubbly and crashy, like every market. And eventually, like when the returns, like there's going to be some sort of a tipping point where the attention comes back to crypto. Like right now, like you said, like this whole situation with Leopold, like has proven that, like, hey, and like like the AI, the traditional markets, the AI markets can be just as like crazy and volatile as crypto. And I don't know, I think it's just a matter of time before that attention comes back to crypto. But we do need like projects like Hyperliquid and stuff like that that are like actually bringing good fundamentals and like have solid product market fit and a good tokenomic structure to in order to like take that attention back, and not just like these meme coins. So I guess my question is like, I don't know, like what does crypto have to do to get that attention back? And like, do you think meme coins are like a net positive for the space, or do you think that they're just like net negative and more extractive than they are gaining value?
I don't think they're any more extractive than they were a year back or 2 years back.
Mhm.
And in fact, I hold a very different point of view with respect to meme coins. I personally feel um, they have product market fit. Like for better or worse, people love to gamble. They see this as an opportunity to solve the money problems of their life, right? Because
Mm.
that's their biggest problem, especially in the large parts of the world where you have this K-shaped economy now, India included, including the mature markets in the US, right? We keep talking about this K-shaped economy. I say net worth of people is also K-shaped. Like the top 5%, 10% are accruing all of the value, while the bottom like the people at the bottom of the curve are just losing more and more. And so
Mhm.
for them, meme seems to be that way out, which probably explains why even in today's extremely bad market conditions, you had coins like Anson, you had coins like Cashcat coming in and having that rally, which retired a lot of people. People see, even though it might have been just like two individuals or four, right? It doesn't matter the number. It sends a signal that there is something here which, if I do it consistently, if I show myself up, right, if I show up consistently, I will hit that jackpot. And
Mhm.
that dream is being sold so well that people want to come back in again and again and extract. So is are meme coins bad for crypto? I don't think so. It's really not about that, because people are also gambling on the other side with semis. And even the way, as you said, right, we've never seen stocks being so volatile, but they are. And the reason is because people, the same capital which was in crypto moved into AI, and the same behavior, the investor psychology that was here went there. And so I won't go in so far as to say that memes are bad. I think memes are fine. But if the industry is all about memes, then what the heck are we doing? Like
Yeah,
that's the real question.
completely agree that, yeah, like right now they are like most of the market share in the crypto space, which is sad. Like there's just like not a lot of other projects that are gaining mind share in the space. Because yeah, I think this whole AI thing has a lot to do with it, because people like are fearing for their jobs and their future income and that sort of stuff. So they're taking like swings financially. They're taking bigger swings, and they want to, yeah, like try to make some money. But yeah, like I think that's a good take, solid take that
And
like.
one more thing, when you like contrast crypto with AI, right?
Mhm.
Um, with AI, it's very clear to me. You are using it. I am using it. Like the scale of adoption and a real impact in terms of how people have adopted it, either for coding. Like I use a lot of AI for research and writing. Right.
Mhm.
I want to find the signals the fastest. So I've basically built a custom dashboard that that kind of tracks everything that's published on a few like places on Discord, like some specific Discord channels or Telegram groups or X handles. And I've like it has totally changed the way I work in the way I execute my workflows. And in fact, my earlier assumption was I would work much less, but what has
Mhm.
happened is I've started to work way more, because
Yeah.
I see more and I want to do more. It's not because somebody is forcing me to do it. I just feel my surface area of how much impact I can create has suddenly increased. But now
Mhm.
contrast that with AI, right? It's nowhere close. Despite whatever we might want to say about like stable coins as being that big thing, or agentic commerce will come in. Look at coins numbers, like quarter on quarter or year on year, they've had, I think, one of the worst quarters. And so we are talking about how these technologies will be greatly beneficial for humanities, but all of that is tomorrow. And with AI, all of that is today. And again, I mean, look at the numbers. Google, Amazon, all of the hyperscalers, right? Although they announced that they're going to increase their capex, almost all of them, like, beat the revenue beat, right? All of them did well this past quarter. So it's very clear to me that there is demand on the AI side, which probably explains both the capex build out as well as why retailers are more interested to continue pouring money into AI. Like, a lot of them found this as the buy the dip opportunity, and they did, which is why there was a rebound, right? Same is not the case with crypto. Like, the hardware wallet hack happened, right? Cold cards or whatever it is. People lost, I don't know, 91 million bitcoins or whatever it is, $91 million, some big number. And it tanked BTC. But we didn't see a recovery in BTC in the same way that we saw the recovery on the AI side. So for me, I think the pain in crypto is not yet over. In fact, today as well, Sailor sold more BTC. He has to cover the dividends and the payments on Strike. So it's like it's such complicated financial engineering on crypto with lack of demand that is forcing people to think twice before they hit the buy button.
Yeah, absolutely. You said something super important that I want to kind of double click on. You said that, like, I created this like custom software basically in order to track different things. I think this is happening more and more. I want to share this tweet because it. So yeah, I tweeted that, like, in this age of AI, like, every single product that has any product market fit will get rebuilt and optimized like 1,000 times by 1,000 different competitors. I think like everyone's doing this now. Like everyone's doing what you're doing and like building this custom software, and like there's no real moat in software anymore, or in code basically. So like, where do you think the code, like the moat is going to be for new projects that are entering the space or anything like that? Like, I have the thesis that like the only thing that really matters anymore is the community that you build kind of in parallel around your product. That gives you like a real advantage and a real moat. But like, I want to hear your take around that. Like, what do you think? Like, where's the moat?
Yeah, the moat is in taste and judgment. It's the final moat now in the age of AI when software is commoditized. That's the only thing that, at least for me, when I think about it, like, why would people want to listen to this podcast, right? Because they feel that you and I might have a unique taste, and they feel inspired by it or connected by it, as you said, right? Because they want to be a part of the community. So that feeling of being more and more human, or being connected to something human, is where the real moat lies. Everything else, especially on the software side, I feel is easily vibe code replaceable. But here's another angle to it, right? Should I, or can I? Actually, can I? Yes, I can. I can vibe code almost anything today, right? Should I, or would I? I don't think so. Like, would I want to vibe code away, let's say, an Adobe Premiere Pro, which is my go-to standard suite from editing to graphics design? Probably not. But would I want to use AI to further enhance my workflows within that software layer? 100%. Is that true for anything, any legacy software, which where there is a let's say it's mandated by some long-term contracts that I signed with the government in terms of how I store my information. It has to meet certain guidelines. I don't think any of that is going to disrupt. And like, the rebound in SaaS is exactly that, right? The SaaS apocalypse, which was being touted as AI will replace software in that sense, I don't think that's going to happen. But do we see a long tail of software coming in where people like me build their own micro solutions for something which is very specific? Like, what I've built may be useful for the next 100 analysts, but beyond that, I have no idea. Right? But can this replace, I don't know, an Aladdin which BlackRock has built? And they've been using it for the longest time for in-house research. I'm sorry, JP Morgan has built for the longest time. I don't think so. So I think that claim was oversold. I don't think software is going away anytime soon. But is software going to change? 100%. And what do I build this AI? How do I use AI to build software? Not to at least for my part, not to sell, but to improve my how I consume and how I create. Like that specifically for me is how I look at this change that's happening.
Yeah, interesting. So, okay, I want to kind of get a little bit back to crypto and where this is all going. So, like the latest kind of, I'm just going to do a little bit of a rant here, but there's still a lot of like debate on if clarity is going to pass or not, and I think that that's going to be like the hot topic of this week here is if clarity is going to hit the Senate floor. So do you think that hold on, let me pull this up. Yeah, so the latest is that like basically they have until August 10th, which is the end of this week basically, to figure out if they're going to vote on this or not. And now there's like a lot of back and forth, and like Democrats are blaming Republicans because they're thinking that they're max extractors, and the Republicans are blaming the Democrats because they think that they're just like anti-crypto and they're not going to, like, they want to use this during the midterms as like a selling point that they're anti-crypto to try to get more seats and stuff like that. Do you think well, one, do you think that clarity is going to pass, and two, do you think that the industry needs clarity to pass in order to get back to its all-time highs?
Well, clarity pause. I have grave doubts about that. That's what I tweeted earlier today as well. They like the Senate is entering recess from August 8th through September 14th. So like how many days do we have? Like 4 days? I don't think so. It's 4 days is not enough. If they couldn't do it in so many weeks and months since because House passed it like last year, if I remember, earlier this year, and so there's been like 6 months, nothing has progressed or whatever the politics behind it. Um, I really don't think it's going to pass this time around. Is it important for the market to rebound? I don't think so. Is this one of the catalysts? Yes, but here is like the way I think about markets is they are operating in a cycle, right? We had no clarity in 2025, yet Bitcoin hit a 4-year high, exactly like it does every 4 years. So there is a market structure. What I feel is when these people come in and launch their regulatory or laws or whatever happen, any bullish news is almost always a sell the news, right? Because that's what they use to hook new people in who think this is going to be running the rally. But haven't you seen every time there's a good news, the market simply sells into that news, and every time there's a bad news, smart money is starting to buy in. So I think that long-term market structure is what determines how the market will play out, not one act. Having said that, for the long-term growth of this industry, without clarity we're not getting there, right? Without clarity we don't have market structure. Without that we don't have clarity on, as you said in my podcast last week, right, developer protections, which is so important. I mean, they could pick anybody up anytime for open source software that they built, simply because there's no clarity around who owns what, right? What are the roles and responsibility of different stakeholders? So from that end, clarity is extremely important. But is it important for crypto to rebound? I hardly think so, because I feel we operate on a 4-year cycle or a broader 18-year real estate cycle, and those cycles have like 100 years of history behind them. So it's not the first time. You have the presidential cycle. The presidential cycle will see the incumbent government, not just in the US, but everywhere around the world, pump more capital and liquidity into the election, like the
Did I lose you there? Okay, hold on. I think I'm still live. Sorry, folks. We got a little technical difficulties. I think I'm still live. I was wondering if my power went out or maybe Rose's power went out. Bear with me through the technical difficulties here. Sorry, folks. For those that are just coming in right now, we're experiencing a little bit of technical difficulties. I believe my guest Ro lost power or something, so I'm just messaging with him to get him back on here. So bear with me for a sec. In the meantime, though, I do think that we were discussing the 4-year cycle and discussing crypto clarity and what was going to happen with clarity. My personal opinion on all of that is that I still think actually clarity does have a good chance of passing. I think it's just too important for the left and the right to get like politics in the way. And I do still think it's going to pass. That's my kind of hot take. But yeah, a lot of people agree with Ro and think that it may not pass. And I don't know. I guess we still have a little bit of time to figure that all out. But yeah, just give me a couple minutes here, everybody. I'm going to try to get Ro back on. Gotta love it when you go live. These are the things that happen. All right, I think he's back. There we go. We're back. What happened? I don't understand what happened there.
Lights out, my friend.
Lights out. Oh wow.
Yeah.
All good.
It takes
all
a
good.
couple of seconds for the power backup to come back up. So
No worries. These are the things that happen when we stream live, but no behind the scenes here. We're not hiding anything. So anyways, we were discussing I was just telling the viewers.
So the Clarity Act, yes.
Yeah,
I don't think it will have that kind of an impact, or would be the defining event for a bull market. It might happen or coincide with that, but I think the market structure is what the ultimate force is.
Yeah, I completely agree. Like there was some point during this last cycle here where I thought like, okay, like the 4-year cycle was just a coincidence, and I had a feeling that it was actually going to follow like more of a business cycle, and that crypto would actually like break the 4-year cycle. But it turns out it just like completely followed the 4-year cycle to a T. And so like if I'm understanding your take correctly here, you think that the 4-year cycle is intact, it's going to continue, we're probably going to have another like 2027 2028 bull market, and like maybe the Clarity Act, if it passes and we get good regulation, stuff like that, maybe that will help strengthen the bull market. Is that correct interpretation?
Yeah. Let me put it differently. As long as the United States have a 4-year presidential cycle, you will always have a 4-year market cycle.
Yeah.
And so all good news going into that is great, right? Because the better the news into that liquidity swing, the better the upside. If not, regardless, you will still see the market breaking out and then hitting a new high, or I don't know what price it finally lands in, but it'll definitely move in the positive direction.
Yeah, completely agree. It's kind of wild, like how accurate. Like Benjamin Cohen is a guy I follow. He does pretty good TA and like has some interesting takes around TA. And he showed this chart here, and like so basically this shows like where we are in 2026 as far as like going into a midterms, and how like the middle white line there is, that just for the viewers, is the average of like what happens during midterms every 4 years, and we're like basically stuck in that range still, a little bit above it. But I don't know. I think it's so interesting how like cycles are just repeat. Like they're not exactly repeating, but like they always rhyme, and we just like no matter how much we want to believe that like this time is different, it just keeps following the same cycles over and over and over again. Do you think there's any possibility? Like you said that like as long as like we have the 4-year business cycle, you think that crypto is going to just align with that all the time?
100%. Because
Yeah.
I mean, think about it. Like, where is liquidity coming from in crypto? It's coming from the exact same places where it comes into the equity markets or any other market. So all of that moves in tandem with how money supply is pushed into an economy, and usually it coincides with the presidential election. In fact, there was this great book written in the 80s. If I can recall the name and I can find that book, but it was called Trading in the Bull and Bear Markets. And the
Mhm.
first chapter shows a chart, and it goes all the way to I think 1900s or even before, which basically maps how a market reacts, and why it is a 4-year cycle. And I was surprised to see, but every single prior cycle, peak and bottom, was with some order of variation, pretty much mapped this 4-year presidential cycle. Like the midterms, it has always had a correction, and then a pre-election year, you will see a great rally, right, going into the next year. Then again swings down, and then it goes on and on. That is not to say like over long term, like what is the trajectory that it's going to take. That's a function of your broader, as you can, your strength of your economy, um, um, the growth that we see, right? The innovation that humanity does. But irrespective of what we are doing, 100% of the time, we basically navigate the exact same market structure. So market structure doesn't change.
Yeah. No, I agree with that. Like like everything just kind of repeats over and over again. Like you kind of talked about like I want to get into a little bit with Leopold, and you brought up like how that was like comparable to like long-term capital management, and like yeah, I think like a lot of this just repeats over and over again. But this was like super interesting. So just to kind of recap for everybody that wasn't paying attention. So Leopold, who has this hedge fund and has been this kind of like a little bit of a short-term star as far as like hedge funds go. He was just producing like insane returns. I think he started out with like a $200 million like hedge fund, and then like grew that up to like 40 billion or something like that. I'm not exactly sure on the numbers, but like basically what happened was so at least like from a tinfoil hat perspective here, like how this all kind of coordinated was like pretty interesting. Was like there's a big sell off like with South Korea, and the whole like Leopold was deep into like the chips and semiconductors and that whole AI trade, and that started to sell off really bad, and a bunch of people in South Korea were getting liquidated, and then Citadel before the last week's rate hike announcement, and now like kind of like spooked markets a little bit, and accelerated this sell-off by saying that they thought that there was going to be a surprise rate hike at the Fed meeting. That didn't end up happening, but the sell-off did accelerate. And coincidentally, during that time, Leopold got completely liquidated on his public profile, and he had to sell 100% of his profile in order to like get out of that situation or be margin called basically. And who was the buyer? Citadel. Citadel like. It looks a little bit suspicious, but like just a wild situation. But like you said, like this kind of happens time and time again. Like there's the whole like long-term capital management. This also happened, I think it was the last crypto cycle with like Three Arrows Capital and SBF in general, the whole FTX situation. Like you get these like short-term stars who just like everybody just glams onto these guys and like makes them out to be like heroes. But like I don't know, like I guess my long rant there is like the question is like, do you think that like this is all part of the same cycle? Do you think this is going to like speed up with AI? Do you think like more of these situations are going to come up, like where these like we kind of talked about with like AI bubbles and then like major crashes? And do you think that like situations like this, because I have the theory that like major liquidations like this usually seem to coordinate and time like market bottoms. Do you think we're close to a market bottom here?
Well, if you recap and go back to October of 2025, something similar happened in crypto, right? We call it the 10-10 crash. So for folks who don't know, on the 10th of October, we suddenly saw a large wick come down on almost all of the alts, right, including Bitcoin. And I lost all of my margin, right? I lost all of my positions. Many of the traders saw their stop losses, and orders they weren't executed, right? So what happens is, this is the exact same thing. When you have a lot of leverage, you have somebody who is looking to take advantage of it, and they want to swipe the liquidity to those levels, right? And so in crypto, that is done by market makers and exchanges, and in TradFi, it's done by sharks like Ken Griffin, right? So what's the moral of the story? It has always been, and it will always remain, the exact same thing: risk management, right? If your risk management is weak, and if you buy into any bullshit story about the future, which may even be true, doesn't matter. Like, am I going to disagree with Leopold on his 165-page essay on AI is going to change the world? Of course not. I see that impact is going to happen. But how do I play it? Like, am I going to bet my house and then go max on my credit cards, and then, I don't know, take loans from my friends and family, and then put all of that money? And what happens when I see a crash? That's exactly what happened, right? Like, I'm simplifying it, but he basically had a leveraged public equities book, right? It all started with Korea when the stock started crashing. Margin calls happened. Like, all the major banks who were lenders, they started having margin calls, and he had no longer the money to do it. And so Ken came in like a shark as he can, and he was able to swipe off a large portion of his public equities book. So all that remains with him is like his last chunk of Anthropic bet, and maybe a couple of small positions. Everything else is gone. So I think he still sits in about $8 billion of portfolio, but it was at its peak, I think, whatever, $40 billion, $45 billion, right? So it's a lesson for me, and has always been a lesson in risk management.
Yeah.
If you don't risk manage, if you don't know how much capital you're willing to put at risk, and which is exactly, I think his letter came out that he wrote to LPs after this, like, they've had a 67% rate. And so I should have been more careful. I should have had better practices, but should have, would have, could have doesn't protect you in the financial markets, right? He could have still held, he could have made decent returns, but I think that's how hedge funds operate. But I guess he just didn't have the liquidity to support that kind of a wide swing. And begs to me why somebody is willing to give so much capital to a 25-year-old simply on the back of a 165-page essay. Like, for me, the math doesn't add. I think there's more to this story that I don't know or am privy to, but certainly it's hard to imagine billions of dollars being given to somebody with zero experience in financial markets on the basis of one essay. I mean, come on, like that to me is like unbelievable.
Interesting. Yeah, no. Like I can't remember who said it, so apologize. I can't give credit, but yeah, someone said like the only way that the smartest people like ever get taken down is through leverage. Like I preach this time and time again. Also, like you just like try to stay in spot for a vast majority of your investments, because leverage is almost never worth it. The only like effective way to use leverage in a semi-safe way is in stuff that isn't really volatile at all. Like getting a mortgage on a home is a good form of leverage. Or like if you got like, yeah, like people use like high leverage in in macro trading all the time for like very small bet. Like you're trying to make like 3 basis point or 30 basis points on something, and you lever that up, and it's a consistent trade. But like using leverage for directional bets, especially in something as volatile as tech, is just absolutely wild. Yeah, definitely don't recommend. But I do think that this is going to happen time and time again. And he brought up something interesting, like, yeah, maybe there is something like that we're not exactly privy to. I'm a little bit like the similar pattern happened with SBF and FTX. Like you just like you get these like guys
Biscuits.
who, yeah, like the guys who just like seem to be like propped up by the system and like are sold as these like wonder hero stars, and then just like billions of dollars go into them and then they crash. It's almost like they're almost like plants to try to take down, like create bubbles and take them down. It's very weird. I don't know if
I
you have
mean,
anything to add there.
like, yeah, it's see, it's fundamentally, when I think about it, it's about human fear and greed. And so when you're too greedy, you do things, or when you're too confident as well, right? When you stop second guessing yourself, and it's so easy to do that when everything is going well for you. Happens in our personal lives as well, right? When everything is going well, we think it's all us. And the moment some situations change and you realize, okay, I was actually lucky, not really smart when, as things were going down my way. And what happens is when you lose that perspective, you end up doing things which lead you to exactly where SPF landed or where Do Kwon landed, and now Leopold Ostenbrenner has landed.
Yeah, unfortunately. And speaking of losses, not to like pile on, but you had a good tweet here also, talking about like the whole cold card situation. I
Yeah.
want to kind of like, because you've got like a very strong research hat, you're very good at these things. I haven't dug too much into this yet, but like, what exactly happened with cold card? Like, how did this exploit happen, and like what does this say for the industry? And also, is Ledger and like other hardware wallets at risk here? Do you know?
Yeah. So I think the story started a few weeks back, and Zach XPT actually wrote a post that got supremely viral on CD, where he was saying basically all hardware wallets are ripe for an attack, and very soon we're going to see something blow up or something like that, right? He was basically being critical of how why you should not be using hardware wallets because they're not safe. And so what happened with Cold Card is 1,367 BTC, to be precise, was swept of around 4,800 addresses. And initially, the conversation that was developing on CT was that this is some use of AI for the attacker to be able to do that. But now I think new investigations are coming in that the bug came from some 2021 firmware, and basically it was a configuration which was basically he could generate new seed addresses through a non-cryptographic process, and that allowed them to get access to a lot of wallets and withdraw the money. Basically that happened. So that tells me that hardware wallets are being sold as these great solutions to self custody, but they are not, right? If this could happen, and most of the people who lost money were like you know baby boomers, or folks who only invest in Bitcoin, because who buys I hardly buy Bitcoin, right? I like to buy. I am at the at the frontier of the risk curve. But folks who are just buying Bitcoin and are trusting the so-called YouTubers or KOLs who were shelling these hardware wallets left, right, and center all the way through 2020, 21, and now find themselves losing like millions. Like many of them probably lost all of their hard-earned money, right? They don't know what to do with it. So this is a very bad situation to be in. And again, begs to question which is exactly why a lot of people think crypto is snake oil in one way, right? Like nothing here is true, nothing here can be trusted. No source, no matter how good, um, gives you an honest version of what risk really looks like.
Yeah, there's so many stories like this. Like I'm just pulled up another one here of like it does seem to be like mainly Bitcoiners, I guess. Like I'm not too familiar with Cold Card, to be honest.
Yeah, it was just Bitcoin, just Bitcoin.
Okay, it was just Bitcoin. Okay, so yeah, it was mainly just Bitcoiners, but like it's super sad to see like the post that you shared there also of like that guy who like 8 years of just stacking Bitcoin and then all of a sudden just all gone. That's just like super sad, and yeah, it's like it's in it kind of like yeah what you said, like there's like with this responsibility of like storing your own keys and having your own like crypto custody comes a lot of responsibility. And like I remember I've been talking about this for years and years and years. I don't think that a vast majority of people should take on that responsibility. Like it's too much responsibility.
Totally no,
Yeah. So
100%.
like what do you think the solution is here? Like should people just store their tokens with centralized exchanges and let them custody it? Like what, or is there like some sort of other solution that we haven't thought of yet so that people can self-custody in a better way? What do you think what's the future look
Oh,
like here?
well, for the vast majority, the answer is, what you just said. Go for a trusted, regulated exchange nearby. I think that's the best way to do it. You have more controls. You have some kind of protection. They also have better OPSEC than what I can individually do. So if it's a large sum of money, it does make a lot of sense. Another thing is, spread your tokens. Why would you, if you were holding, let's say, even one BTC, it makes a lot of sense to kind of break this down at least in 3 or 4 different places. So imagine if cold card would have gone down, you still hold 80% of what you have. So I think those basic things allow you to stay protected. But on the larger point on what should we be doing, it's hard for me to say, because on one side I would say, what's the point of you holding my crypto if I can't hold my crypto, right? It was all about self-sovereign capital, money.
Mhm.
So if the moment I lose that, sovereignty goes away. Now, it does where when does it start mattering to me? Like in small size, doesn't matter at all. In large sizes is when it starts mattering to me, and at which point I think I have a trade-off to make. Like, how much
Mhm.
risk am I willing to take, versus do I go with custodied solutions? Do I go with a Coinbase Prime or a Galaxy? Or there are many names out there who offer solutions. I would say there's more R&D is required here to figure out how can we be the best of both worlds. And I think that you ought to offer more choices to customers in terms of their risk appetite. At the same time, people need to be smart enough and realize no solution is foolproof, and
Mhm.
just spray out your capital across a bunch of different sources.
Yeah. No, I think that's good advice. And so there was something that I found interesting many, many years ago that like to kind of like take this full circle here. I think one of the main reasons that this industry has stopped innovating was because of like what happened with the SEC and like these administrations just going so hard after developers and like scaring people into not innovating anymore. But I think one of the reasons why I want to get clarity passed, and hopefully clarity does pass, I'm still actually confident that it will. I think that
Mm.
this is. I think that before the midterms, they have to put it to a vote, and then like the Republicans have to get it onto the floor. I don't want to get right back into this conversation, but anyways, like I still think that there's a good chance that it passes. But even if not, like they're like the SEC or like the CFTC also said that they're going to like do some rule making. Whatever happens, I just think that we need to get developer protections back in place so that we can start innovating in the space again, because like there's so many undone like innovations. Like for example, Vitalik wrote this paper or blog post, I think it was like 2018 or something like this, around this concept of social recovery. And there's only been like a couple different projects, including one that I used to work with, that tried to do this social recovery. I still think that like innovations like that, I don't know if you're familiar with this concept.
Yeah.
um, yeah,
Mm.
I think something like that in the future, some variation of social recovery could be the right trade-off, where you can still remain like in custody of your funds, but you have this like other solution that you can still recover it in the worst case scenario,
Yeah.
if something happens. So
Yeah,
I just want to
I've also
go
seen
ahead.
other solutions where you kind of break up the key into like smaller
Mm,
binary pieces, and then it's held by like trusted but distributed counterparties, and whenever you want to recover, you basically can kind of
oh, interesting.
have that aggregation come in. So there are solutions, but none of them got mainstream adoption. And I think partly because none of them were easy enough for or offered a better way to do it. Like, people at the end of the day are seeking convenience, right? So if your
Mm.
solution is not convenient, there is no chance in hell, unless there's a lot of money and I need that complexity. I'm not going to adopt it.
Yeah, 100%. Yeah, that I think that's one of the things that's really held crypto back, is that just the UI UX is just so complicated for the average person, including
Hmm.
self custody. But I do think that AI has the chance, like once it kind of merges with crypto, which I think it inevitably will. I think AI really has a chance to to create like crypto into like or help scale the industry, where like people won't even necessarily know what's happening in the back end, but they'll be using crypto solutions, and they'll be using AI, like just speaking to their AI as the UI UX, and be using crypto solutions without even like realizing it. So I don't know. I'm still super optimistic, but like yeah, I guess we'll see where it all goes. I guess my question after all that rant is like, are you still optimistic that like innovation will come back to the space? Do you think that like TradFi is just going to kind of take over and kind of dilute crypto down?
It's already clear that's happening, right? Crypto is now dividing into two parts. One is the TradFi layer, where you have these walled gardens coming up, and Canton Network is a great example, right? Which is a basically a permission. I don't know if it's wise on my part to call them a blockchain, but let's do it for the sake of it. But you have a permission setup of some kind where access is granted through some kind of a gatekeeper. Um, it just completely defeats the purpose for why blockchains exist. So for me, I am net negative, even though if there is an opportunity to make money trading the Canton coin, for instance, I'll probably do that. But is that what I want to see? And was that the promise? I don't think so. And so 100%, I vote for crops, right? I wrote two pieces on Ethereum's, Ethereum stated crops ideology. I think it makes a lot of sense. And that's my bet. Like, that's what I really want to win, versus seeing like the likes of large banks completely taking over both the validator network, the whole, or dictating terms as to how and at what time and who has access to these financial services. That completely defeats the purpose for me.
Yeah. So I keep kind of pushing on the same point, because I want to like get to some sort of because I don't actually know the solution in my mind, but like I want to get to a place where like how do we properly, because like I want to bring dreamers back to this space. Like I think that the the whole space has been a little bit corrupted with like these short term mercenaries, and there's nothing wrong with like chasing money and trying to like make money like in the most efficient way possible.
Hmm.
But like how do we get like long-term dreamers back? Like, because I remember in 2017 when I entered the space, like people used to invest in these ICOs and like take like a very long-term play, be like, I'm just dollar cost averaging into this thing, I know it's going to be successful over the long term. And but now there's just like, it seems like people's attention span is just like so much shorter. How do we get long-term investors back into the space? Like how do we like yeah, I think you understand my point.
It's I don't think that we're getting there anytime soon. And I think you hit the nail on the head when you said we're now moving into, the way I put it is, we're moving into the attention economy. We've
Mhm.
already there, like we're halfway there or 80% into it. And what this means is, whatever is the next shiny object is where where capital will start to flow. And you can only hope and pray that over time people recognize, okay, this is the real deal, and capital flows back into it. So what does that mean for an average builder? There are two categories of builders out there: somebody who's just starting up versus somebody who is running Ethereum, right? The likes of the folks who are there, or Zcash. Those are experiments which are now 10 years into the making, right? So I think the burden of this change is on them right now, which is why they are the industry leaders. They have to set the agenda, which Ethereum has done. Zcash is also trying to do, and then they found the right backers, right? Because there is always somebody out there who believes in that ideology. On the other side, for the vast majority, it is simply a function of who captures attention first, and that drives all of the value and volume. Like I like to look at OpenAI versus Anthropic, right? OpenAI was killing it, and then suddenly Anthropic came in, and their model started getting all the attentions. And compare the valuations today, right? It's completely flipped. And so that's not changing no matter what market you look at. It's even more visible in crypto, because crypto is it's just like come in and basically go all full ballistic mode, make as much money as you can, and then move on to the next thing. Because if you don't do that, you're left holding the bag, and there is nowhere else to go. So it's hard for me to say. I think the way I think about long-term capital allocation is quite simple. My long-term capital allocation bags are two-pronged. One, are projects which have proven themselves over a decent amount of time frame, and have something which is visible, has utility, and has clear metrics which provide evidence of adoption. When I have all of that, those are check marks. And then finally, of course, does it meet those criterion as to how I want to see blockchains develop? Which is why Ethereum remains my biggest long-term bet. I made the most amount of money holding Ethereum in the last cycle, and I'm sure the same thing is going to repeat this cycle. Like literally zero risk, 3x is how I see Ethereum.
Yeah.
Now come on the other side, right? How do I invest in startups or early stage projects? It's just about one thing for me. It's just about people. Like if I see a hint of um, greed, right, that tells me, or I want to know where the founder's head is at, right? Is he somebody who's looking for, and what is my evidence? My evidence is the low float, high FDV structure. My evidence is like 4 people literally dictating and controlling the entire setup, right? That tells me that's not a great look, because I've seen what has happened in the past when I have seen that structure. So for me, and I'm not saying you don't start small. You will obviously, before you bootstrap a network and make it whatever decentralized or something, you are 4 people sitting in some dorm room trying to build something, and that's completely fine. But all I'm seeking is evidence of how you think and what your vision is. If I don't even see that, then for me it's a clear no. And if I do see that, I want to double down and help those builders as much as I can in my personal capacity, either being a voice for them on Twitter or in any of the communities that I'm a part of. Like, so it has to be an individual thing. You have to find and a slow grind. Like if a project is not a slow grind, there is no way it gives me any semblance of confidence that, okay, this is something which is a multi-year bet for me. So people first, right? And depends on the size and stage of where they're in, and that's how I decide how to allocate capital.
Yeah, I think that's a great take. And yeah, I mean, again, I keep taking it back to like what I seen in like 2017 when I was early in the space here. Like people used to have this like long-term vision, and they used to like just dollar cost average into like projects like Bitcoin and Ethereum. And then like I think this is always going to exist. Like you're going to make these short-term bets where you hope to like outperform those long-term bets over a short period of time and accumulate more of that underlying like long-term bet. So I think that that's never going to like go away. But I think that one potential thing, like I have a little bit of an optimistic take here. I think that if we start to like really rally behind better tokenomics designs that are like more immutable. Like for example, like Hyperliquid and Aerodrome, I think have like great tokenomics designs that like really like by design give value back to the token holders. I think if more people go in that direction, then we can get like these long-term investors back into the space where like same with Ethereum. I think Ethereum has a decent tokenomics design. I think there can be a little bit better as far as like value that comes back to the token. Like I think they need to make some like a little tweaks there. But as soon as Ethereum hits another all-time high and like makes this a substantial all-time high again, then like there's gonna like be this Lindy effect that goes in, and like people are just gonna like really start believing in Ethereum again, and you're gonna get the long-term like believers back. And I think more projects need to like take that kind of headspace and like design their tokenomics properly, which kind of leads me into like this whole situation. Like what is the, like from your point of view, the ideal tokenomics design? Like there's been a lot of like debate around Uniswap now and this whole like fee switch that happened. Like Hayden was like, hold on, let me bring this up here, like going through point by point, and now there's like a huge beef between Uniswap and Aerodrome. I'm personally more on the side of like Aerodrome. I think that their tokenomics design is much better. And oh, we lost him. Okay, we're gonna bring him back. I'm gonna get one more final take from him, and then let me just give me a second here. We a little technical difficulty. We're gonna get him back in here. Sorry, folks, technical difficulties here. Gonna get Ro back in here. I got one last take I want to go through. But yeah, I just want everyone to know that I am still very, very optimistic about where this space is going. I think that, let me get rid of that. I think like Ro kind of talked about a little bit. I think that we're still in this 4-year cycle in crypto, and I think that like 2027 is going to be a great year for crypto. We're gonna like find the bottom here this year, probably over the summer here. We might have already found the bottom. Maybe there's like one more drag down, but I think we're very near the bottom now, and I think that we're going to rise a little bit into the end of the year, and 2027 is going to be an overall like bullish year. Not financial advice or anything like that, but I think 2027 is going to be a very bullish year, and 2028 potentially another like blow off top for the space. And I think that during this time, it's been a pretty good washout for the whole industry, where a lot of projects that didn't have long-term views, didn't have like long-term founders that were in it for the long haul, got washed out. And I think that cleansing is actually overall a good thing. And I think that during the next bull market, especially if clarity passes, it's going to be like very, very similar to like 2017 when I got into the space. We had just like a radical bull market. And yeah, I think that energy can quickly come back to the space, especially in this like AI space right now. This AI regime that we're moving into, where everything attention economy, like Ro said, where attention just moves at the, like very, very fast. I think that attention like has been away from crypto for quite some time, but it can very quickly move back to crypto. So yeah, I think there's still like very, very good times ahead here. Let me just see if Ro has responded here. We'll get him in here for one last time. Again, for those that are just joining, a little bit of technical difficulties. my guest Ro just got his power knocked out, but he's going to be rejoining here in a minute. So just bear with me while I get him back in here. And then we'll discuss a little bit more on tokenomics. There he is. There he
Yeah.
is.
No,
Okay.
it's one of those days
It's all good. It's fun. It's
when
good
anything happens.
Things happen. Things happen. But
So
yeah,
yeah,
no, I
tokenomics,
wanted,
right?
yeah, I want to get your take around like tokenomics and what is the ideal design.
Yeah, biggest debate in crypto today, right?
Yeah.
First is first before even answering what's the right tokenomics model. The elephant in the room is how does value sync the value that is created by a project? How does it sync to, and who does it sync to, right?
Exactly.
So you have multiple stakeholders today. You have, and that to me is the biggest problem. Like you have equity holders, right, for the of the labs, and then you have some version of why a token should exist for an ecosystem. And then you have the token holders. Now, when a project starts making money, like in a traditional company, it's not at all difficult, right? We all know who is the marginal stakeholder and who will finally capture all of that like upside that that a company creates, and it's the equity shareholders because they're the ultimate risk bearers of risk.
Mhm.
But what happens in a crypto project like that differentiation breaks, right? So now comes the question, like even before you have a token, you have to answer this question, right? What is the purpose of a token? And if you don't need it, don't have one, right? Just have like go pure play equity, raise money from VCs, do the 12 yards and do a public IPO or whatever, whatever traditional exit strategies that you might have. If you think you need a token, now tread very very carefully, because the moment you break that promise, because think about it from the other side, like when I invest in a token, I am investing because I think, and otherwise what's the point of even discussing fundamentals, Byron? Because fundamentals for me is not just a business story. Fundamentals to me, that story of fundamentals complete when I see a very clear sink of value into the object that I'm buying. And if that
Yeah.
instrument or object does not capture any value, no matter how great the fundamental story, it doesn't matter to me. So that's the first part. If you do decide that you need a token, projects without any equity and a token will do better in crypto than projects with dual to with a token and some form of other instrument, which is now competing for the same set of value that the project accrues. So Venice is the good example here today, right? They raised $65 million Series A, B, whatever it was, and suddenly we heard, we realized that there is equity in the project, and that equity will capture the bulk of upside. And I also read somewhere they want to go public at some point. So what the heck do I even have the token for? Because isn't token a way for you to um, have that public access of capital? And did they not have that? Of course they did. And it would be foolish to think that they don't hold the Venice token on their treasury today, and they do, right? Which means they have value capture in the market through a token. But now the value that Venice as a project generates selling inference is, if it's not captured finally by the token, that's troubling for me. So
Mhm.
yes, I mean, he came out, he said we're going to have some kind of a token saying we are in fact buying back. We're adding more ways to like start turning on the fee switch on various products, and then start piping that revenue back into buying the token as well. It's very important that you have that honest conversation. If the token is just a meme coin, I am totally fine with that, right? But if your promise to me is your fundamental project, right, quote unquote, meaning there is going to be a business model around it, and there's going to be a real product that customers will use and pay for and capture that value, and that was the promise which was being advertised to incite me to buy, and then you break that promise, that's a problem for me. So that's my very simple filter on how I think about who needs to have a token versus not. And more than that, who needs to have an honest conversation with me, the buyer of the token, about about your purpose for this token launch, right? That's all I need to know. The moment I have that clarity, it doesn't matter. Now you can have your equity on the token, and I will, in my head, have a very clear assessment of risk. What when you break that promise, you break that assessment of risk for me. And without that assessment of risk, I'm just buying, like I'm going into the market blind, and I don't want that.
Completely agree. And you said the key word there, clarity. And I think that I think that once once clarity passes, I believe that
Once
a
we
lot
have
of these
clarity, we have clarity. We'll have
we have
clarity on
clarity.
tokens as well,
Exactly.
100%.
It's just a meta clarity. But no, I think that a lot of like projects, because I've seen this, like I've talked to many founders and like worked with some projects, and like a lot of projects just like really shied away from even like mentioning their token, because lawyers advised against it, and it's just been, people have been so scared of like what was going to happen, like is this going to be a security, is this not going to be security, like we really do need that clarity so that people can like take more risks and like try different tokenomics models. And but yeah, I completely agree that like we need it's we need it needs to accrue to like one object. It can't just be like equity or tokens. My long-term view is that eventually we do like IPOs on chain, called we bring back the ICO, but we need to like switch up our mentality around like how tokens are created, and like why do we have this cap of like hard caps of tokens where that doesn't exist in the equity space. Like I think we need to be able to do multiple rounds if you want to compete with other like traditional like projects. But anyways, that's another topic for another day. But like, do you think sorry, go ahead.
Yeah, it's also like, again, right? It all boils down to what are you building and why and who, and
Mhm.
what are the fundamental building blocks of your project that merit a token.
Yeah,
Without having that conversation first, you will never know what instrument works for you. Like, because foundationally a token is more than just a fundraising instrument, right? Like an equity is only a fundraising and a governance instrument. A token does a lot, right? Because it's
exactly.
programmable, so you can stack utility on top of it and create like various use cases that it's just impossible to do with equity. But that is the
Exactly.
question to ask, right? Do I need all of that? If you don't need all of that, then don't promise a token, and that's completely fine. Like, you have so many projects in crypto that don't have a token. Like Etherscan is the most used project, and one of the most used tools in crypto. They don't have a token, neither do they need one. Dex Screener is another one. I think recently they flipped Hyperliquid and Pump to become the most revenue generating app in crypto. Can you believe that? And they don't have a
Wow.
token. They don't need one, and that's okay, right? And they're being honest about the fact that they don't need a token. And so if you don't need a token and you're launching one, now you better be honest with me and not make false promises, or on the pretext of um of promising some future returns, whether or not you say it implicitly or explicitly, right? That's what the investor or the buyer of the token is doing. And so
Yeah,
that's the only thing. Like, for me, it doesn't matter. Like, these builders, like Eric, has a lot of social capital in the space, right? So who am I to question him?
yeah.
but
I think
but
that's a very
for him even more so, right? For him even more so is the need to be transparent and honest upfront. And I didn't quite like that his investor had to come on social media and back up the team even before the founder did. Like, that to me is not a great look.
Yeah, fair enough. I think you make some very fair points, and I
Of
agree. Like
course.
if you do need a token, you need to be very upfront about this. And that was like about like how that value accrues to that token, and like where is the value accruing overall. And my like complete take is that like if you need a token, like you said, it all the value should like accrue. Like obviously, like you need to like pay expenses and stuff like that and invest into your future. But like most or all of the value should accrue back to the ecosystem. And I think a token like is just a coordination mechanism where like it allows you to create these like self-fulfilling like ecosystems. But yeah, I guess that was my question is like, do you think this should be immutable? Do you think that any project that needs a token should program it like ahead of time into the token's design, like, and the tokenomics that like, here's how the value accrues and here it's going to be done programmatically?
It depends. It depends on what you're building. Like, Bitcoin, I think it made a lot of sense for Bitcoin to be 21 million tokens. And it also made a lot of sense in the way that the token waterfall was designed, like have a lot of tokens front loaded and launched into the economy rather than latter, because initial pitch for Bitcoin was programmable peer-to-peer money. Now, whether or not you and I are using it as money is indifferent. But if it is money, indeed money, then one of the key properties for money to be money is that you and I can use it, which means it has to be in existence and it has to be in circulation. So now let's bring all of it together and make it free from any centralized control. Like tomorrow, somebody can change the rules of the game and print as much, because that's the problem we have with the United States dollar or any currency for that matter, because they keep printing more and adding more debt into the economy, right? So no, in that case, like a different tokenomics model. But Ethereum, right? Ethereum is a programmable computer, right? You can build stuff on top of it, like new financial primitives. They can interact with each other. You need a different form of incentive layer because there are more stakeholders involved than just like the core Bitcoin community who is keeping the network up, like just the validators. There are so many other layers on Ethereum or any similar blockchain. Would I follow a Bitcoin tokenomics model? Of course not. So it will depend on what you're trying to build, what your end goal is, and then functionally determine, like, is it programmable? Do I need immutability? Do I need a fixed supply, or do I need an infinite supply? Like, Ethereum has an infinite supply, but that doesn't mean the token would sustain unlimited emissions. Even they had to figure out ways to make it deflationary eventually,
Exactly.
right? Because that's how the token sync is going to capture value into the token. So for me, the filter is, what am I building, and then have an honest conversation with stakeholders around how emissions will happen, what would happen to those emissions, and then and make sure there is not one group who excessively controls the token and can dump on my head anytime. Like, that is the problem for me. Like 5% of the people are owning like 95% of the tokens. It's a high FDV launch and they suddenly dump on my heads. That breaks the promise. So for me, if Ethereum, in all honesty, would have launched in the way that they did, like having a public discourse on and transparency around their token model, and eventually figuring out ways on how they can turn it deflationary. Because the first thing I do when I invest in a token, I look at what their emission schedule looks like. And the moment I smell, I smell either insiders bulk loading it and planning to dump it, or I have no clear signal of how it will turn deflationary, no matter how good the project is, it is immediately a negative for me, right? Like Ondo, for instance, great project, right? Good team, great project. But 3.5 billion tokens are minted or released, emitted every quarter. So
Wow.
why would I want to be the exit liquidity into a cliff that unlocks so much, right? Versus Hyperliquid, where there's a programmatic buyback of the token. Like, it's not burning, it's majorly like they're still holding it in their treasury. So I don't know what's going to happen tomorrow. But today, with the truth that I know about the project, the cash flows that I see regarding how Hyperliquid is getting adopted, the primitives that are getting built on chain, I can make a reasonable judgment about its value, and then buy, like, risk accordingly, right?
Yeah, completely agree. Yeah, that's why I believe that everything should, I mean, not everything, I don't want to make like absolute statements, but like a majority of projects should just have these, immutable kind of like laws in place of programmatic, like here's how we're going to buy back, here's what the tokenomics are. It should be all laid out ahead of time. I think
100%.
the more certainty you can give to the community, the better it's going to do over the long term. So completely agree there. Anyways, we've covered a lot of topics here. So
Yeah.
thank
Or
you.
I'm sorry, just I'll end with one interesting post I read about MetaDAO tokens, because I
Okay.
think that is also that was a interesting experiment where projects are able to raise capital. Like for early stage teams, it makes a lot of sense. They are raising capital in the market, and then if I am the holder of that token, the money that is captured in their treasury minus whatever is their monthly expenses that they need to run the business, you define that. I am okay with that. Now I fund that business. Every other proposal goes through a prediction market like setup where I vote with my tokens or capital as to whether or not the proposal passes or fails. So the
Sorry,
reason why,
what project is this?
so it's called MetaDAO. It's on Solana, and it's a
Okay.
launch pad which kind of combines it uses prediction markets for governance.
Okay.
Basically, the way
Interesting.
it works is, let's say if you raise capital for your next project on MetaDAO, right? And I invest and give you my money. All of that money goes into a treasury. That
Mhm.
treasury is controlled by a governance contract, which basically can only withdraw capital if the token holders vote with their capital through questions and responses in the exact same way that poly market works, right? What we saw was a lot of proposals were rejected by the community there in those active projects, which are, by the way, receiving 10,000, 20, 50, even 100 grand per month in allowances just to allow the founders to build. But unless the proposal very clearly stated a business outcome that would benefit the token, it didn't pass. So I'm not saying that's a perfect example, but it does put some control in the hands of the community on how and where capital can be allocated and how does it benefit the token holders. It adds some teeth to their handle, at the same time makes sure both the founder and the investors are aligned mutually if you're launching a token. So one experiment amongst many, but something which I think is worth noting now.
Yeah, that's super interesting. I'm gonna look into that more. This is what like crypto and like tokens in general just enable experimentation like this, and this is what I love to see. So yeah, I just really hope that more experimentation like this comes back to the space, and we can make people optimistic about crypto and its future again. So thank you, sir. I want everyone encourage everyone to go follow you on X because you do have some like great takes and you do deep research. So yeah, definitely go follow Ro. He's got a YouTube channel there that he's got links to also. Just to kind of like wrap things up here, what are your predictions for the space overall over the next like this cycle here, like call it 2027, 28? Like what's like your highest conviction bet, or like one or two high conviction bets?
Oh, great question. My highest conviction bet is Ethereum, simply because I think after getting leaner, let's use that word, right? It's gotten more leaner. All of the
Mhm.
teams have now diversified into their own independent units, so they can just tackle that problem without the governance overhang, or the
Yeah.
bureaucracy seeps into large organizations. Ethereum can only win if it's lean. So that's my number one bet. And my second big bet is Hyperliquid, simply because I think they're rewriting the rules for what it means to run a large scale exchange. It's not decentralized, quote unquote, and that's an issue. But it's not as big an issue. And the proof is the product market fit. I love their tokenomics, and that's going to be my second bet. My last one is going to be Zcash, simply because I think private
Nice.
money needs to exist and
Agreed.
they have the best shot at winning.
Yeah. Great bets. Awesome. Wow. Appreciate you, Ro. Thank you for your time. I really had a lot, like I learned a lot just from talking to you. And yeah, I think we might turn this into maybe a regular occurrence. So let's see what happens. Thank you. Thank you, sir.
Absolutely. Thank you, Byron. Thank you for
Okay.
inviting me.
Okay.
Signing off,
See you, everybody.
guys.
Bye bye.